My topic is 25 years natural catastrophe in CEE, observations and recommendations. I will take a lot of personal experience in there. The first I saw when I was talking about natural perils in Eastern Europe was a dramatically broad coverage in 1989, 1990. That may sound surprising because most people think it was not covered. No, almost everything was covered in the past in some of the countries. And I think this is the first we always have to remember. If we're talking about CE markets, we're not talking about a region which is homogeneous. It is very different. Every country has a very, very different history, also in insurance. The density, the lines of business, it is very, very different from country to country. And still today. And I think that's sometimes what especially reinsurers high up 30,000 feet above the ground tend to forget. So please take every country as a separate entity and a separate history. The second real big adventure there was when I was working for a company called Leipzig. I was in the board of a company called Ergo Hestia at that time alone, without Ergo, in Poland. And we had the 1997 floods. That was a real disaster on the Odra River. And again, most of the people had insurance. So we were more or less three groups of companies. It was the PZU as a monopolist, the former monopolist, having 60 to 70% market share. It was Varta, now Talanx Group, with about 15% market share, and about 30 to 40 companies with 15% market share. We rented mobile homes, went to the Odra River, also shared the costs and the places with other competitors, small competitors, got the television media there, got the radio there, asked everybody to come in who had a cover, either with a policy or if they didn't have some information, and we handed out cash very quickly. The goal was to be faster in paying than the politicians were promising payments. The consequence, afterwards we checked, we had about 80,000 claims that we handled that way, within 6 weeks. Of course, there were some claims that were lingering on for 1 or 2 or 3 years, but 6 weeks first to get them all registered and certain payouts. There was a lot of sublimits, so often there was just a cash payout. We had an estimated 1% fraud, even though half of the cases were on trust. It also shows if somebody, people don't steal in churches. It's a little bit because they are open and they will not close up. And therefore, theft is something which is also related to closed doors. And the density of insurance after the event went up dramatically. So it was a great example of showing how to do claims management. Another aspect out of that from the reinsurance world, in 1996, the same, so the parliament in Poland was discussing the founding of a state reinsurance company with mandatory cessions. That was almost a done deal. All this beautiful money flowing out of the country. But then came 1997 flood, and the inflow from the reinsurance industry was about 2 to 3% of the GDP. So now the same said you should have mandatory cessions abroad in order, if there is a big catastrophe, money flow back in is helping you. So, this was a very important role, and out of that came the first myth I want to talk about, which is here. In CEE there was hardly any cover of natural perils before 1989. This is and was a myth. And we have countries today, like Poland, where the density of flood insurance, for example, is about 80%. It's higher than Germany. Out of that, we also have a recommendation. My first recommendation is handle loss effectively. Handle loss effectively is a key for success. And you have to plan for it. Last week in Sarajevo, the head of the claims department of RMV Insurance, which is a very large insurance group here in Germany, made a very nice impression of how to handle those losses. Really practically. It's not about IT, by the way. It's about really communicating, how to put the agents in force, etc. Maybe we'll hear from the Turkish side a little bit about that as well. I found that very impressive, the planning for claims, which they showed during a conference in Berlin. So planning for the claims is utmost important. Your goal should be to pay out the losses faster than the politicians can, because then you will have more satisfied customers, and they're not expecting huge things. If we have in Germany some areas where we asked, how do you perceive the claims handling? They're not asking to do it in one day. They're not asking to get money for everything. They just want to be helped right away. The other point where loss handling was, for me as an experience, something very important, has to do with the coverage. And here I refer to Bulgaria, to the earthquake event 2012. It was a 5.6 earthquake, so there was damages. However, in Bulgaria, mostly, there is deductibles. So suddenly, more or less, nobody got money for a couple of cracks. Do you know what happened to the density of insurance afterwards? It went down, not up. And this is something where you also should think, what can be covered? Should it be a small sublimit? Or should it be the full limit with the deductible, to take, let's say, the two extremes? My recommendation is rather use sublimits. If you look in the really severe earthquake-prone areas, like Japan, like California, this is what has proven also to be the most effective. And also resource saving, because if you have a huge accumulation, capital costs get out of hand. So, recommendation 2, sublimits may be better than deductibles. With that connected is a myth, second myth, mostly in Eastern Europe, that all natural perils are insured in the West. That is not the case. There is huge accumulations, you don't have it insured. Give you a recent example of discussion, Netherlands. You can imagine Netherlands below the zero, if a big dike breaks, it's going to be a huge loss. They had this cover in Netherlands until 1953. In 1953, there was a severe accident. The coverage was removed from all policies. And in 1955, such coverage was forbidden for Dutch insurers. So they were not even allowed to insure storm surge. In recent years, there has been a discussion again on that, but it has been put off because the loss potential is just too high. It's about 50 billion for this very severe event. The problem there is the probabilities, because these probabilities are 1 in 1,000 to 1 in 10,000, which means the pure risk premium is very low, which on the other side means also that people are not willing to pay very much. So you cannot manage the costs. So the project is at the moment put on ice, on shelf, because there is not enough capital out there to cover such a concept. So myth is that all natural perils are insured in the West or are only insured. Oops. Observation number 3. Expect the unexpected. Sorry, I have to turn to Bulgaria again. Bulgaria, everybody was talking when talks about CAT, about earthquake. Last year we saw that suddenly a hailstorm, or a couple of minutes really, was much more devastating than ever calculated for an earthquake. Is that something to, well, put it on the side, it just happens? No, I think that's very important to understand. There has been, I haven't found it, otherwise I would have given you somewhere in my pile, a study that one of the worst events possible in Germany would be a megatornado hitting Berlin, with about 14 to 25,000 dead and an economic damage of a bit over 200 billion euro. A tornado. I've been on Minorca when there was a tidal wave. Thank God it was at night, nobody was on the beach. But the tsunami looked almost as in Thailand. It came from a small earthquake. So expect the unexpected. And here you can also see how far should you expect. Our owner, Warren Buffett, was asked once, are you worried about big meteor hitting the Earth with your insurance? He said, well, the passive side I'm not worried about, because if a large meteor hits, the active side of my balance sheet wouldn't be worth a penny. So who cares? Clear, if we have a large meteor hitting the world, we would all, well, let's say 99.5% of the world population would die of hunger, because there would be no sun. For a couple of hundred years only, but who cares? It's only a couple of hundred years, we're under 3 kilometers of ice. And so, who cares if, taking Warren Buffett, Coca-Cola is still worth something? So, you can also be fatalistic. So, expecting the unexpected means the unexpected, expectable unexpected. Not the unexpectable unexpected. And not the act of God, which is the end of the earth. So, no Eichinger scenarios here. And that comes to recommendation, observation number 4. Management of insurance has to understand more about natural perils and its models. And this is a very personal experience. If you ask a manager of an insurer, do you have models? Yeah, we have models. Just saying, yeah, I understand that. Could you just briefly explain what they're about? Oh, yeah, they're about 100-year events. Is it for events, or for years, or for the market? I get so-and-so. Yeah? And then you notice they don't understand. And I think this is the biggest danger we have. We have a specialization, partially necessary, partially unnecessary, which leads to a communication concept which normal people do not understand. And I think there is also a big issue for IT to use this huge data and boil it down to human, understandable knowledge and simplifications at the right point in time. Model simplifications is probably more than model complications, the topic of the future. Because otherwise we become too model dependent. Simplifications, I mean by keeping parameters so simple that you can dialogue with many others. A good example is the HAIL model we have just for MOD developed in Germany. There's very few parameters. I read through it as a nominative edition. In half an hour I was done. And I understood it. And I think this is a little bit what we have to do. Behind it, so sure, there is complex mathematical models behind it. But the essence should be simple. I come to the third myth, mostly in the East. Cat perils are all handled by private insurance industry in the West. And this is not true. Most is state-run organizations. Best known, probably France. You have it in Spain. You had it partially in Florida. So it is not so that the private insurance industry is running the show totally. We're getting, thank God, more and more hybrid models, PPPs. I think what we see in Turkey to a certain degree is private, but on the other side is very much supported. What we see in Romania is in this PPP area. And that's something which is important. Overall, I think even the private industry couldn't run everything. Look at just at infrastructure costs. We couldn't run it. That comes to insurance myth number 4. Cat cover, where it's mandatory, the penetration is almost 100%. There I taught somebody from Romania who has experience. And this is really a myth we have, especially Germans. Because if something is mandatory, we stick to it, don't we? You know, we're very good at it. That's the problem for us. If you take, just last week we had some I was in Warsaw on totally different topic, which was corporate governance and compliance. Now, the American rules are terrible, we get them all here. The problem is we are really diligent in applying them. So more than 100% of our time will be spent on corporate governance and compliance in the next couple of years. More than 100%. But it's dangerous. And just assume now, Romania, suddenly there is a big earthquake. You have a penetration of 50%. It's a little bit in the future, so you already have 50. Now you have 50% uninsured. Question, what do you plan that the politicians will tell the people who were not insured? Because the politicians have to tell the people that are not insured, you're not getting anything. If they're getting something, your model is dead. So I think this is for contingency planning. The most important aspect is communications. And again, Turkey I find very interesting because in Turkey this problem has been addressed a little bit more. And in GDV we also found a way. We don't have mandatory insurance. We have a special communication concept on the state level, not even on the federal level, because it won't work. And this is, my colleague Turov will mention it a little bit later. And that comes to the last observation. The dialogue with politicians, the public, and the consumer protection is utmost important to understand what CAT cover is about. We have to see politicians think in return periods by nature, 1 in 4 and 1 in 5 years. By their nature. And they cannot comprehend, they don't want to comprehend anything else. So 1 in 100 years is something out of their range. You have to make the politicians understand that the 100th year could be tomorrow. And what are they going to say then? And how are they going to do it then? I've seen in many countries a discussion, Poland probably the most intensive. And this is probably the biggest and most important aspect. And to come back to the first one and combine that with a very efficient claims handling for those losses you have. And prepare if the big one hits, wherever you are.